Welcome to Newsday on the BBC. I'm Sharonjit Leal in Singapore.
And I'm Kasia Madeira in London. Our headlines this hour. Late night talks in Brussels about how to solve the Eurozone debt crisis despite a new deal to boost jobs. The banking scandal goes global, markets slump as investigations continue on both sides of the Atlantic.
A Chinese spacecraft prepares to return home after an historic voyage into orbit. And why a new national curriculum is causing concerns for some pupils in Hong Kong. It's 8 a.m. here in Singapore.
And it's 1 a.m. here in London. Broadcasting to viewers in the UK and around the world, this is Newsday. Hello and welcome. Unplanned talks are going on into the night in Brussels as EU leaders try and thrash out emergency measures that might lower the borrowing rates of Italy and Spain. Earlier measures were agreed to spend $150 billion to boost economic growth. While speaking at a news conference, the European Council President Herman Van Rompuy gave more details about how the money would be spent.
€10 billion increase of the capital of the European Investment Bank will increase the bank's overall lending capacity by 60 billion, and this money must flow across Europe, not least to the most vulnerable countries, and help companies grow themselves out of the crisis. The other 60 billion from the reallocation of unused structural funds, in particular to small and medium enterprises and youth employment. And second, from the pilot phase of project bonds that should be launched this summer and will go to the key initiatives in energy, transport and broadband infrastructure.
Herman Van Rompuy. Well, the French president says discussions on the future deepening of Europe's economic and monetary union have been put off until October. Spain and Italy declined to sign off on a proposed stimulus package unless they received assurances that action would be taken to reduce their borrowing costs. Well, President François Hollande has been giving more details.
Pas simplement.
And this is in everybody's interest, not just in the interest of Spain and Italy. It would be a short-term approach if we were to say, well, there are two countries in difficulties and the others are fine. This is not true. We need Spain and Italy to have some lower interest rates, lower than today. Spain as well need to recapitalize its banks because it will ease things for the entire Eurozone. And thanks to this stability, we will have new growth perspective.
François Hollande. Well, our economics correspondent Andrew Walker joins us on the line from Brussels. And Andrew, we had expected these meetings to be over, but they are still continuing. Just bring us up to date where we are.
Well, what we had earlier on that you heard there being announced by Herman Van Rompuy, the president of the European Council, the man who organises these summits, was an agreement in principle to a package to stimulate economic growth across the European Union. Now, it turns out that Spain and Italy they've agreed those numbers, as I understand it, those big financial numbers, but they're not willing to sign off definitively on this package until they've got some.
And it looks like we have just lost the line from Andrew Walker from Brussels. But just to reiterate there that unplanned talks are still going on late into the night in Brussels as EU leaders are trying to thrash out emergency measures that might lower the borrowing rates for Spain and Italy. We will try and bring you the latest on that as and when we get it. And actually, I think we can just get Andrew back on the line. So, Andrew, just to finish off what you were saying when we lost the line to you.
Well, yes, the Italians and Spanish may have agreed in principle to these financial numbers in the growth plan, but they are holding out signing off on it definitively until they've got some sort of commitment to take urgent action to reduce their borrowing costs, and that is what they see as being the absolute priority for this summit. But it's proving a hard nut to crack because the German leader, for example, is reluctant to take any of the measures that are being suggested because because they would ultimately put German taxpayers' money at some risk. And she also thinks, I think that the countries need to be under continued pressure to get their own borrowing needs down. And I think she's a bit concerned that if their borrowing costs were reduced too much by intervention from the rest of the Eurozone, that the incentive to sort their own problems out might be undermined.
Okay, Andrew Walker monitoring those talks that are still ongoing in Brussels. Thank you very much.